Good morning, and welcome to another edition of Saturday Morning Coffee Talk. I'm Kyle Pankey, and today we're going to take a look back and see what lessons can be learned from 2026 so far. We're halfway through the year. There's tons of headlines out there making people wonder, should I be doing something different? So we're going to take a look back and see what these headlines mean, how the markets have done, and more importantly, what it doesn't mean for you and what we can expect potentially moving forward. But before we get into that, we have an exciting announcement here at Retirement Solutions. We are moving to a new office. The address is located on screen. Should you need to find us, we will be there as of next Tuesday, July 21st. So pretty exciting. We've outgrown this office, and thanks to all of our wonderful clients and the trust you guys place in us, we are actually going to be moving to a slightly larger office that'll better help us serve you guys. So thank you. Now, diving into these headlines, if I asked you to describe the headlines for the first half of 2026, you'd probably think the market had a terrible year. When we think about geopolitical tensions that we had, tariffs that happened, interest rate uncertainty, inflation talks, and we're already starting election headlines and it's only July. But what we have to remember is the market and the news are two different things. With the news, once it became a 24-hour program, it's no longer news, it's entertainment. You have to remember that when you see these crazy headlines come out. And what we got to remember is markets don't wait for perfect news. Businesses are out there to make money. Headlines describe today's problems. Markets price tomorrow's expectations. Companies are forward-looking. The headlines today, do they matter? Yes. Long-term, are they going to change and modify markets? Most likely not. Markets are going to continue to work through it. But let's dive into one of those headlines, interest rates. They're a huge topic on everyone's mind, and I'm here to tell you that the market can work in any interest rate environment. It just wants to know what's happening. So where we're sitting right now, we don't know whether we're going to lower interest rates this year, stay steady, or potentially even raise them. But I can show you in this chart from 10 years ago, from 2017 till now, we can actually see that regardless of what the interest rate was, whether it's 0% or close to it in 2020 or over 5% in 2024, the market continues to trudge upward. So do we have some setbacks along the way? Most definitely. But when we stay invested and make sure that we're focused on our long-term plan, that's when we can really reap the benefits. Do interest rates matter? Yes, but long-term businesses find ways to continue to make money through these interest rate environments. So don't worry too much about the interest rate environment, and the market will continue to do what it does. Now, another huge thing and key point of this year is AI. It's everywhere. It's taking over the news cycle. We're seeing companies get crazy valuations. We're seeing people saying, hey, we should just go all into these AI stocks. We're saying, hey, we should get out because this is an AI bubble. We've heard that too, similar to the 2000s .com bubble. Well, what I want to show you here is a chart comparing the peak of the .com bubble for the NASDAQ 100, which is the 100 largest tech companies, from 1999 to compared to 2025. And the PE ratio is the value a company has. So their price that they're charging for the stock versus the earnings they actually have. If you look here today, we actually have the NASDAQ 100 compiled with stocks that are making money. Now, this is vastly different than what it was in 1999 and 2000. In 1999 and 2000, majority of this index was actually compiled with stocks that were overvalued by 100 times for what they were earning in a given year. And some of the companies, almost 10% of the underlying holdings, weren't profitable at all. So I wouldn't be too worried about AI being a bubble. Will we see some setbacks? Most definitely. But I wouldn't be too concerned about the bubble popping like it did in 2000. So 3 things that we learned from 2026 is news is rarely as good as or bad as it feels in the moment. So don't worry about the headlines that you're seeing. Number two, markets reward patience far more often than prediction. So we're not trying to guess what's going to happen tomorrow or next week. We're trying to create a long-term plan that works for you. And number three, having that financial plan matters. We don't want to try and play this guessing game. So if you or anyone you know needs help creating that long-term plan or finding some footing in today's market, please have them reach out. Our information is on screen. I'd be happy to answer any questions as well. My email is below. Have a wonderful Saturday.